wanted to come on here and record this video to talk about the short-term bull cases and the short-term bear cases, as well as the long-term outlook of the market. That being said, though, please hit that thumbs up button, as well as hit the subscribe button and become part of the community, and let's get right into it. So for starters, I wanted to focus on the short-term bull case. What's been going right with the market, why we're at all-time highs, and where this market's going. So currently the market's been hitting all-time highs because Trump has put a lot of pressure on Powell to cut rates, and now it is looking like he will be getting replaced, and his job's gone. So rate cuts are coming in the near future, whether Powell's the one who initiates them, or Trump appoints somebody new, or Powell gets pressured into doing so. So that is one reason the market is starting to get excited. It's now pricing in 3 rate cuts, and that is very good with where the current economy is. We're honestly ready for a lowering of rates, and I've said this in past videos, is we need to lower rates. When we start to lower rates, it's going to open up the housing market again, and we're going to see housing inflation go down because people will be able to get better rates on their mortgages when they're house shopping, and then same thing with vehicles as well. So it helps. It actually is deflationary, even though it can also be inflationary to have rates too low. But at the pace that I expect them to get cut, I know Donald Trump's calling for 1 to 2% rates, but where I think they'll end up chilling for a little bit in that 3 to 2% area. I think the market's going to be fine, and we're not going to see a spike in inflation. And we've actually seen with all the drilling that we've been doing with oil, that's caused some deflation, in which is countering any inflation that people may have thought we would see from tariffs. And so that has also been a bonus for the economy and why things are still chugging along. Although people thought we would get some spike of inflation, we're really not expecting that. And it's partially because we're bringing investments to America, and we're drilling here in America, and it's benefiting us at the end of the day, and it's allowing us to be at a point where we can look to bring interest rates down. And on top of that, trade deals are starting to line up. We're expecting a trade deal with India here soon, and then hopefully China after that, and they're going to keep lining up. And now that we're getting some positive noise around the trade deals, the markets have been liking it, and they've been rallying. Just like Trump called for Canada to rescind its digital services tax, and a day later, that's exactly what Canada did, and they are resuming trade talks as well. So hopefully we can also get a deal there with our neighbor. So those are the bull cases in the short term going for us, and that's why we've been seeing all-time highs in the market since Liberation Day. Now, what is the short-term bear case? A lot of people are honestly having a hard time finding one, and I guess you could look and say, some of these trade deals could go sideways, and Trump could take bigger steps in trying to punish them through whether it's tariffs, or maybe he's not happy with how the TikTok deal starts to go down, so then he ramps up tariffs again on China, and you start from square one. That would be like the black swan short-term thing that could happen, or maybe another Middle East conflict in which that could also bring markets back in the short term, although none of that noise so far has, because it's happened already here in the past, and none of it sticks. Then markets just rally right after like its 2-day pullback. But that is like the best thing I can come up with for like a short-term bear thesis. But the long-term bear thesis I have here, and I've had some concern about this in the past, and I've mentioned it before here on the channel, would be unemployment. Rates are staying sticky, and my fear is, you know, Trump has made it clear he wants to fire Jerome Powell and get him replaced. But if it doesn't happen soon enough, and Jerome Powell, let's say, continues to keep rates high, could it be too late to save the labor market? We never know about that. But even still, if we do lower rates fully back down, can unemployment stop ticking up, or will it continue sticking up? Because you got to think, a lot of jobs have been getting taken over by AI already. Now, it's not nearly the level we're going to be seeing here in the future, in which that could become a problem come, honestly, end of 2026, early 2027 maybe, depending on how quickly the AI technology, um, vamps up. But when we're in a cyclical interest rate period where we purposely tighten the market to create some unemployment, to balance out the job market and inflation, and then you mix that with the AI boom we've had, in which we've seen some of these companies, you know, laying off workers for AI, maybe we do get hit by some sort of unemployment bug sooner than later, um, in which we didn't expect. Now, I wouldn't expect this to deteriorate like this month or in the next. It probably wouldn't be till an end of 2025 thing at the earliest, and that's why I say it's a little bit of a long-term bear case. But that would be my long-term bear case. Now, I personally think that when Trump either appoints a new chair or Jerome Powell gets forced to cut here in either July, which I think there's a small chance that he wouldn't cut in July, but honestly, he even kind of changed his tune a little bit, where I think he's going to cut in July, but let's say he doesn't. I think rates for sure get cut in August, and it's gonna have been late, so I think they answer that with back-to-back cuts, and honestly, August could even be a 50 basis point cut rather than a 25. So I think rates are coming down. I think it's a very bullish time in the market, and one thing that I've been seeing, shout out to Amit. He's been saying this, and I'm gonna repeat it because it's very true. Is the difference between now and 2021? A lot of the companies that are running that have their evaluation, they can back it up with their growth or with their financials. You look at like a Google, they're just trading 15 times PE. They're not expensive. You look at a Microsoft, they're trading, I don't know off the top of my head, but I know it's nothing crazy, probably like 27 times. I'd have to pull it up. But none of the big tech is like bubbling. And then you have some companies such as Palantir and I would even Robinhood. You can't really put in that category because its growth is like crazy, especially with crypto coming. Well, not even coming, but expanding like it is. They still have so much more room to run, so their valuation is reasonable, honestly. And now you're seeing like a SoFi run because of that innovation. But then when you have the innovation that's coming to financial services, and that can run, but then you also look at like the AI infrastructure and how it's honestly affecting all types of businesses. But then you also have the chips and the GPUs and the database infrastructures that also are growing rapidly because of it. And that's kind of why I feel like you see a ton of high multiples because there's a bunch of high growth rates and the company's growing really fast. You don't see these earnings declining, and we really are in like it's a wealth boom right now in my honest opinion, and maybe I'm sounding a little too bullish and maybe I'm going to be wrong, but right now in the short term, at least talking 2025, I don't see the cracks. Inflation's not spiking, it's not even really that sticky, and that's with the tariffs. And then, you're talking about revenue that the country's going to be bringing in from that. There's always going to be demand for bonds. Then you got the stable coins and how that's going to get people to buy treasuries. So I just see a lot of good stuff going for the economy. And as soon as I see a crack, I'll call it out. But I just wanted to come on here and talk about this because people are talking about the markets being frothy. And honestly, I've been worried about it. But now that I sit back and really look, it's like, but everything's intact. And the only thing I'm worried about, and I've said in the past, is unemployment. Now, I don't think that's coming tomorrow, and I don't think that's coming the next few months. So, as far as the next few months, I think we're good. Now, something I do want to bring up as kind of a short term bear case, even though it's not a short term bear case, is I'll throw it up on the screen here. The fear and greed index is at greed, and it's getting towards extreme greed. And usually, by the time you get to extreme greed, that's when you'll see a market pullback, and that's normal, and that honestly doesn't always have to do with anything fundamentally. There is no lie that the market has been running hot lately. So it would make sense for a market pullback. I'm not saying this thing should just go to infinity, but I think a healthy climb with the current status of the economy and the country and these companies, I think that makes sense. Now, if we just, we had that V-shaped recovery from Liberation Day. Now, if the V-shaped recovery just continues through, that recovery and just all the way, to infinity, then yeah, then we're gonna have some issues. But when you really zoom out, we're back to where we were before Liberation Day, and the quick run had a lot to do with catching back up to those gains, and zoom out like the last 5 6 months. We've been trading in a range, and yes, it's different companies at all-time highs than what were in like March and April. Um, but that stuff happens. Money moves around. So I am not currently worried about where things stand, but I am constantly keeping an eye out, like I've said, because you have to stay on guard about that stuff. And that's why I'm here trying to educate anybody who maybe they don't have time to go through all the Twitter posts or all the newspapers, or not really newspapers anymore, but articles. And so I try to put it here in a small video for you guys. So if you guys enjoyed this video, please hit that subscribe button and become part of the community, and hit that thumbs up button. As well as, I want to just end this video off of, none of this is financial advice. I just want to give you guys my current outlook and my stance on today's market, and just give you an idea of where my head's at. But I hope you guys all have a great day, and I'll see you guys in the next video.